Eric Mwather with Mwather.com for the mentorship program. It is about 30 minutes, 25 minutes before they open, March 25th, 2015. As a follow-up to an email I sent you, we are looking at the S&P 500. And we can see here on a weekly chart the potential for now looking for any reason to play this short. That's the key. I want to go to the Dow Transport because I believe they are showing us also some indication of where the markets might be looking to go. You can see the Dow Transports are down the most for the day, down for the week, down 2.62%, and they have this declining resistance. We are very close to 50, so any slide below 50 suggests a big candle down on a weekly basis. So my thinking here is that also if you take a look at the Dow Transports from a purely day-to-day perspective, it is already below 50 on the daily RSI time frame, suggesting that markets could also follow through down. If we take a look at the top side, we already saw resistance here. So what I'm trying to get at here is more and more, we should be looking to see whether we can find a spot in this market that could suggest that the general market follows the Dow Transport. And if we take a look at the S&P daily, what I was talking about here is the possibility of a big candle down on a day-to-day basis because it is very close to 50. That doesn't mean it has to move below 50, but we want to take advantage of any potential move below 50 because that is when you'd want to go short for a day trade because that day would be confirmed down. And also we see that the Dow is also very close to 50 on its daily RSI, and so we are watching this. Any slide below 50, you definitely do want to go short at that particular point. Why? Because that will be suggesting that the market is due for a day-to-day drop. If you go to the Dow on a 60-minute candle or a 60-minute time frame, you can see that this is where it stalled recently, and so we see evidence of topside resistance, which explains why it came off the recent highs and now showing resistance here. I think we have to watch this. The more we see evidence that the market wants to move lower, the more we should look for reasons why the market could pull back. So I'm not saying go ahead and short it outright, but if you see, or if I see something in the charts that indicates, okay, this is where they could stall and maybe our theory is correct. So once we see evidence that our theory that the market could in the next day or two move below 50 on the daily time frame, then we can get out. So my thinking is we don't have to take the trade in the moment, but we look for evidence as to when the market could do that. So maybe we might take a look, for example, at, and let's take a look here. We go to my hourly chart here for the S&P E-minis. So E-minis, S&P, now trading at 287, and looking at the RSI here, you can see that if we can get a pullback, let me see if I can get the right color here, so bear with me. Ooh, let's go yellow. All right, so if this line here, if the market can show us resistance on this line, and it's not letting me do that, so I apologize for that. It won't let me. Oh, I guess it can. Hold on, I'll get this right. No, maybe not. Oh, all right. So anyway, I apologize. My tool is not working here, but what I'm trying to say is that even though we don't have to take the trade, we just have to be very vigilant in case we start seeing evidence that the market is starting to pull back again. I think the next trade, if it works out the way I think it could, is for a big down day somewhere around here this week. And that's when you want to take a good advantage of the market pushing the spiders down. Eric Mwather, good luck. Keep you posted. I am out. Woo!